GM, good morning. Welcome to the Milk Road Show, the daily crypto show where we explain markets in plain English because your brain is already full of mortgage rates and tariffs. I'm your host, Jay Hamilton. It's Tuesday, April the 15th. Now, I know that one of the biggest assets that you all hold is Solana. And we say this all the time. One of the best ways to develop your thesis for investment is to understand the team behind the company, to understand the vision of that team. So today we're diving deep in to Solana with one of their co-founders, Raj Gokal. We're going to discuss Memecoin activity on Solana. Is it good? Is it bad? Beyond Memecoins, there's a lot of other activity on Solana that's not getting the same amount of attention as Memecoins, DePIN, payments, and many more. We'll dive into these activities. Also, institutions on Solana. Are the institutions on Solana? BlackRock recently launched on Solana. What is happening with institutions on Solana? Ethereum gets a lot of credit for having institutions on chain, but Solana's also cooking a lot in this space. We're going to talk about that and so much more. Before we jump in and hear from Raj, tomorrow we are going live at 12:05 p.m. Eastern on YouTube and Twitter with the one and only James Lavish, seasoned Wall Street investor, macroeconomic expert, and co-founder of the Bitcoin Opportunity Fund. We're going to dive into everything tariffs and what is happening right now in the macro setup. So tune in tomorrow. Today's episode is brought to you by MoonPay. Trade crypto fee-free, fast, and on your terms. It's also brought to you by Coinshift, powering top crypto treasuries with their yield-bearing stablecoin CSUSDL. Raj, welcome to the Milk Road Show.
Thanks so much for having me, Jay.
Yeah, absolute pleasure, my man. Really appreciate you joining us today. Okay, so markets are doing what markets are doing. We're not here today to talk about markets. There's a lot of noise, and that noise I don't think is going to end anytime soon. But today I want to talk all about Solana. And I want to start at the beginning, not to go into too long of a story, but it's always interesting to hear from a founder like yourself a little bit of the founding story of where were you? What was the initial plan when you guys first got together and wanted to start Solana? What was the original vision?
Yeah, I think one of the things that's really cool about Solana and that resonates with the community is that the original vision is still the vision that everyone talks about. And it's the vision that we're executing on, which is, basically creating a blockchain that is a single state machine with no sharding that pushes the physical limitations of how fast and cheap and scalable that state machine can be, to the point that it becomes, the global state machine for ultimately all finance. That was always the original vision. Anatoly's first pitch deck said, the tagline was blockchain at NASDAQ speed. And a lot of people get that wrong. They misremember it as NASDAQ on the blockchain or blockchain version of NASDAQ. It's actually, the idea was, can you have NASDAQ grade performance for a blockchain, which, at the time we were really unsure how much of finance blockchains could eat, but we thought, it might be something like 10 or 20%. And that, there might be some intangible new market that gets unlocked that creates more finance, because at the end of the day, every marketplace is a form of finance. What we've seen is that original thesis around just constantly pushing performance to approach something like a Moore's law level of continuous improvement has unlocked just use case after use case. Solana's identity and its primary means of onboarding users has changed from market cycle to market cycle, but the underlying strength is that performance always makes a better user experience. It's easier, it's snappier, it's faster, it's cheaper. It feels like the regular internet. It feels like fintech apps that people are used to using, and it's super simple. You don't have to keep track of where your assets are or what wallet addresses you have across different layers of blockchains, and having your sort of mental model an idea of where you should be storing your assets versus where they are. It's just one state machine, one wallet address, which sounds dumb and simple, but it really took Toly and kind of the most forward-looking, world-class, scrappy, kind of masochist engineering team that we could find and convince to work in crypto before crypto was cool at all, and well before it became uncool again, to work on the problem. So we really in 2017, you have to remember there was no DeFi. DeFi was not a term. NFTs were, there was the idea of NFTs and CryptoKitties had happened, but it really wasn't clear that there would be use cases that attracted millions of people. But the big swing that we took was, building as if that was inevitable, as if there would be millions of users, and as if they would be generating tens of thousands of times the on-chain activity as they were in late 2017. And I think the biggest differentiator was that most of the competitive landscape was planning for something like hundreds of times that volume and activity. And as we've seen, we actually still have stress tested the network. Like sometimes it has been at capacity over these past 7 years.
I want to comment quickly on your point of Solana's original vision around NASDAQ at blockchain speed, or as it's commonly said, NASDAQ on chain. One of the big product market fits that is clearly coming very quickly that does not, everybody talks about stablecoins, right? Stablecoins achieve product market fit, very exciting. And it's, just the first inning. I don't even know if it's the first inning. It's like batting practice of stablecoins, the future of that whole network and the amount of products that are going to come out of that, from savings accounts on chain to Stripe embedding stablecoins in their whole payment network, to remittances around the world, to corporate treasuries, blah, blah, blah. Very exciting. But the one product market fit about crypto that is coming, and I think coming very quickly, and I don't know what your thoughts are on this, but with the market structure bill coming in the US, 24/7 trading of equities is a huge product market, a huge unlock that nobody's really talking about yet, maybe because we don't have it yet. It just feels like that alone. We were chatting with Vlad from Robinhood the other day, and one of the big things he talked about was exactly this. He was like, they went to 24/5, right? So they still don't trade on weekends, but they went to 24/5. You can trade 24 hours a day, 5 days a week. And he said, in order to do that, the lift of that in terms of capital costs, in terms of working with partners, in terms of the stakeholders they had to coordinate, all that, he said it was just gross. The challenge that they went through to do that took them years to figure out how to do that. And here we are. We're going to come and we're going to say, hey, here's 24/7 trading of equities. And again, I think quite soon, like it's, you mentioned that we're in a bit of a, crypto's not so cool again right now, right? But then you look at stuff like this and it's like, that is so freaking cool. Like, how can that not get you excited? I don't know what your thoughts are on that.
I think it is super cool. And I've talked to Vlad about it for years at this point. He's been really laser focused on 24/7 equities trading. He's also talked about how replacing traditional rails for payments and banking services that they provide and things like trading using on-chain infrastructure has reduced their costs by something like 90% in some cases. So on-chain is it's simpler, it's more efficient, it's faster, it's more profitable, and you get these knock-on effects of just a better user experience that feels like, why weren't we doing this all along? Like, why wasn't there weekend trading? I think, if you know anything about me, I'm still thinking that there's too much incremental thinking about what's going to happen next. So 24/7 trading is exciting, but that reminds me of, back in 2017 when people looked at CryptoKitties and they thought, oh, well, maybe Disney will launch NFTs. And that's so exciting. The reality was everyone was going to launch NFTs. Every brand, every person, every creator, and it happened almost overnight, right? The same thing happened with Memecoins. I remember in 2021, I used to talk about having tens of thousands of token launches per day, when to date there had only ever been like thousands. And I remember people looking at me, as if I was crazy. Like, what are all these tokens going to do? What's the point? How would you even track them? How would you curate them? Well, it's happening, right? It's happening every day. And it looks like a toy, but all of that infrastructure is the exact same infrastructure that will allow anyone to launch an on-chain security, that has an unlimited amount of programmable properties to it, and how it shares and distributes and promises value to its holders. So that's exciting to me. Is the things that we don't have a word for yet. We didn't have a word for meme coins. We didn't have a word for NFTs. There was no word for DeFi. And I think, the future of finance is going to get really weird. It's going to get, busted open. And a lot more people are going to become, more financially literate. A lot more people will become traders, and a lot more people will become issuers of these on-chain securities. And so, that's where I think Solana is going to do really well, because we've always historically been this sort of black hole for creators, issuers, and traders, collectors, because the experience is so fast, cheap, easy, and everything lives in one state. So my kind of North Star, Anatoly's North Star is IBRL, increased bandwidth, reduced latency. My North Star is help things go viral. Right? The space grows when things go viral. And this goes all the way back to the early days of the internet. When the dancing baby GIF went viral, if you're old enough to remember that, right?
Oh, I remember. Yeah.
How many people created email accounts for the first time, learned how to, parse through an email address, figured out what the @ symbol was for the first time? Like, there's a lot of learning there. Some people might have learned how to use a keyboard and mouse for the first time because that was the way to get to that dancing baby GIF, right? So I think, what I'm excited about is something that looks more like traditional capital market assets, like stocks or bonds, or a revenue share token that might be a means of, enforcing or improving loyalty for a consumer brand. And having these things go super viral, the way that we've seen things do on the internet, and now we've seen them happen in crypto.
Let's be honest, everything in crypto comes with fees. But here's a nice surprise: MoonPay Balance doesn't take a cut. You heard that right. No MoonPay fees when you buy or sell crypto with your MoonPay Balance. Top up with dollars, pounds, or euros, then you're ready to trade instantly whenever the market moves. And if you change your mind, withdraw your cash. No MoonPay fee there either. Simple, fast, ready when you are. Check it out at milkroad.com/MoonPay. Disclaimer: network and ecosystem fees apply. There's so much irony in that statement, because meme coins in their nature are viral. In fact, it's really just speculation on virality. That's all it is, really. Meme coins. It's just you're speculating on which viral meme chicken jockey last week is going to get the most attention. Is really like that's what that is, which is also a very fascinating use case, and one that has gotten a lot of negative attention as a result of a lot of negative actors, unfortunately, that have been in the space over taking advantage right now. But I think the long term is still very exciting. Before we jump in to meme coins, I just want to ask one more sort of founding team question, which is, you very purposely set up Solana differently than Ethereum and some other networks were set up in terms of the structure of the team, in terms of how you built and how you operated in the beginning. Can you talk to us a little bit about how you were set up differently and what your strategies were as you built Solana in the beginning years?
Yeah, I wish I could say that it was, some grand insight about how to differentiate from Ethereum. But I think the reality was, if you take as true that the biggest differentiator for Solana was going to be performance, and you also take as true that Ethereum had insane dominance over market share. Like, when people talk to us and they learned that not only was it not an L2, not only was it not extending Ethereum's functionality in some way and trying to build off of Ethereum's momentum, that it wasn't even using EVM, and it wouldn't, the code wouldn't be compatible. Most developers, most users, most investors completely wrote the entire thing off. There were too many dead bodies of people who had tried something similar and failed. Two things that we did differently. One was we didn't try to hype up the design of what we were doing from a technical perspective. There was not a really super comprehensive white paper that had all kinds of peer reviews and made the rounds and went through lots of rounds of debate. The focus was always have enough of a white paper to quickly communicate the general concepts, especially the biggest differentiators like proof of history and the fact that you would have strong assumptions about time across the network before consensus, because that was very novel and new, but it wasn't a computer science grade problem that you needed PhDs working on for years to crack. It was just a novel design for a verifiable delay function that's actually pretty easy to explain if you just see the paper. So instead of having a white paper that was trying to design the entire thing, to be perfectly formed, and then get everyone in the industry's opinion on it, and then raise hundreds of millions of dollars to go build it, the idea was let's build as iteratively as we can and de-risk the biggest parts. Does proof of history work? Can you achieve consensus with multiple nodes in a private instance? Can you have an adversarial test net and have people in different geographies around the world and still achieve the same kind of performance? So it was much more like the lean startup version of building a blockchain. And so the second thing we did was we didn't, as I mentioned, we didn't go raise hundreds of millions of dollars. We raised just enough money to get to that next validation point, which is what typically you're supposed to do in startups. It's just when there's, super abundant capital available, most teams will, especially, first-time founders, they will try to raise as much as they possibly can, which means you turn the whole company into a hype engine, to raise money. And then when you get that, pseudo infinite runway, it just takes all the tension out of the system. There's this hunger that you can have in an early stage team that lives and dies by what they build and de-risk and what innovation they achieve. And when you give them unlimited runway and unlimited resources and lots of credibility and fame before they build anything, you just kind of suck that soul out of the equation. So what we did was we stayed lean. We were extremely engineering focused. The only face that we put out to the world was the technical face. It was Anatoly, it was the engineers. It was displaying in public through an open source from day one code base, through pull requests, through a Telegram channel, and later a Discord where every engineering decision was debated in public. It just showed through the building process what this thing was going to become and how it was getting built. And that was how the earliest supporters and believers in the project came to know the project. It was through this it was like a secret that everyone had. And so, I think that worked out really well for us because culturally, what that meant was the DNA of this ecosystem became much more about pragmatic builders that, built first and looked for product market fit in a very sort of skeptical way. You don't want to convince yourself that people want something before you have validation that they actually want it. And you find out that they want it when they pay for it, not when they, blog about it or tweet about it. It's just very much bringing sort of a traditional lean startup approach to an industry that I think a lot of people were very disillusioned with because there was so many white papers with tokens that went nowhere. And, that's just a really disheartening thing when a lot of young, talented people are coming in. They have opportunity costs. They could have gone into finance. They could have gone into, consulting or engineering. They could work at Google. Like they want to build things that really work. And so, I think that cultural differentiation has kind of stuck with us. And honestly, it's kind of the most important thing. I think we have to keep that as long as possible.
Meet CSUSDL, the stablecoin built for institutions and DAOs. Don't just hold basic stablecoins, earn yield, all without compromising security. backed by regulated real-world assets and secured with institutional-grade risk management by our friends at Steakhouse Financial. Put your treasury cash to work, earning native yield and protocol rewards. Built by the team behind Coinshift, which is trusted to manage over $1 billion in business treasuries on chain, including Aave, Gitcoin, and hundreds of leading institutions. CYCS USDL is gaining traction at milkroad.com/Coinshift. From the outside, it's very apparent. It's very easy to see that Solana is built like a startup, and not just Solana, everybody in your ecosystem acts like that and thinks about users and use case and real revenue and product market fit over research papers and technicals and academia, which Ethereum is more known for from the Ethereum Foundation, that being more of their focus. I want to shift gears because we only have a limited time, and man, I could talk to you forever. But there is a few other topics I really want to make sure we have time to get into, and meme coins and institutions are the two. Let's talk about meme coins first. Despite the founding being NASDAQ on chain, which would make you think, okay, Solana's objective is exactly that, like tokenized stock, tokenized equities. I know obviously it's beyond that, but recently Solana has become known as the meme coin chain. Talk to us about your thoughts on meme coins, good or bad, and how you position Solana, because it is, as meme coins have died, Solana has also taken a hit. Is Solana reliant on meme coin activity? Where do you see the future of meme coins and the future of Solana, and how do they play together?
Yeah, I think for anybody who's really paying attention to the builders, last year in 2024, Solana onboarded more developers than any other ecosystem in crypto. That's the first time in 8 years that number one spot was not something called Ethereum. So Solana is where the large majority of developer growth is happening, and all of those developers are not just working on meme coins. Actually, a very, very tiny percentage of them, I would guess single-digit percentages of them, are working on launch platforms for meme coins or trading platforms or other derivative products. And so anybody who's been paying attention to what they have been building, and this is not just some sort of future set of releases, some theoretical set of products. Things like, the entire DePIN sector, decentralized physical infrastructure networks, more or less all lives on Solana. That entire vertical lives on Solana. It's not the type of thing that, goes as viral in all of the mainstream news, the way something like a Trump meme coin might, but it's pretty sexy to anybody who cares about real businesses, real products. And this is a really important point. Products that needed crypto to be built in the first place, they're built with way less capital than they could have been built by centralized companies, and they compete in the same playing field, not just this little sandbox of crypto users, but with actual real users in the real world, and they win because they're just better products, right? So Helium does this. They built a network of millions of hotspots through token incentives that you mine by connecting, something that looks like a router to your modem. You're sharing your excess bandwidth to create a mesh network with everyone else who's contributing to this network. And ultimately, they started with low bandwidth. A low bandwidth network for low bandwidth devices. So connected scooters and Kindles and things like that. And at that time, it seemed like, well, are they really going to be able to generate enough revenue? Is this going to be, something that enough people will use? Will there be enough devices? But what they've done is, through that huge network, they've now pivoted into 5G. And then their 5G network was as good as any other network, and it was like $15. And then because all of this is so efficient, it's on crypto rails, there is no company that has to maintain all of this. It just works through a protocol, an open protocol, and even an open hardware standard. Now they're able to actually offer that mobile plan for free. So it's the first completely free mobile plan that's totally built on crypto rails. And
who doesn't think a free mobile plan is cool? right?
Yeah, it's amazing, right?
It's
they have, I
incredible.
think, at least hundreds of thousands of subscribers at this point. I use it on my phone. It's great. And you might ask, well, is that just a fluke? Are there other things? Well, HiveMapper is a completely different business. They built dash cams, and they learned a lot from what Helium did. But those dash cams work as well as a normal dash cam. It'll record, your accidents. It'll record you driving. Everyone's familiar with dash cam footage, and things go viral there. But this one is taking 4K footage and contributing to, similar to Helium, a crowdsourced data set, a crowdsourced mapping system. And it's just better, right? Because it took I looked this up. It took somewhere between $4 and $10 billion for Google to, put those cameras on top of, hundreds of cars, drive every road in the world, and build Google Maps. And then it refreshes, on sort of a quarterly or annual time horizon. It's not hours or days. HiveMapper can refresh in minutes, because they dial up incentives in, let's say, an area where there's an accident and you want to know which lanes are blocked. What does the debris look like? Can I pipe that image to a GPS system in a car so that you're seeing the actual, crash and debris as it gets cleared up, as you're getting to that intersection or that part of the highway? Like, this is what the future of mapping looks like. And it can only happen if it's distributed with, people contributing from everywhere. And that actually works way more efficiently if you have an open protocol that people can be incentivized through with tokens. So, the proof is in the pudding, right? HiveMapper has done, they've remapped like 40% of the world's roads in like a year and a half. It's crazy. It's insane, right?
Yeah.
And there's just so many examples of these things. And, so what did that take me? I'm trying to get better at this. That took me like 5 minutes to talk about 2 projects. There are projects in games, there are projects in DeFi. Everything that's happening in DeFi on every other chain is also happening on Solana. It's actually happening, a lot of the times at much larger volumes with much larger user bases. It's kind of boring because a lot of it is not necessarily unique to Solana. It's just better. Like it's faster, it's cheaper, it's all those things. So things like Drift and Camino and Jupiter. I mean, we hear every day that these product experiences are the best in class for DeFi. So, everything that can be done in crypto exists on Solana. Some stuff that can't be done anywhere else exists on Solana. Not all of it goes viral the same way that meme coins do, but maybe we could do a better job of kind of educating the public, or maybe it'll just kind of, these perceptions will fade over time, because we've kind of seen that already. In the last market cycle, Solana was the NFT chain, and nobody remembers that anymore, right? So, I think over time it's arcing toward, I don't know what the label will be, but I think it's arcing toward things that are valuable, that are uniquely enabled with this performance, and I think things that we can really be proud of.
Yeah, certainly. Very exciting to talk about those other activities, which DePIN just does not get the attention that it deserves. If you want to talk about an area of crypto that has real product market fit, that has real fundamentals and real use case, like, look right there. The challenge with DePIN, I wouldn't actually even say similar to DeFi. The challenge with DePIN is you're going up against like multi-billion conglomerates.
But same, it's the same with DeFi. It's the same with stablecoins, right? What happens is there are a lot of people that understand that vision for years and build relentlessly towards it with no external validation. They get no kudos, no credit. They're starved of capital. Nobody believes them. And then one day it just hits, right? All of a sudden, every major politician knows about stablecoins. They're trying to unblock them. They think they're a strategic asset to the United States. It's like, it just, Stripe is making acquisitions. It just explodes. And, I don't know anybody who's great at timing these predictions, but I think we have a good idea that they'll happen. It's just on what time horizon. So I look at DePIN, it looks exactly the same to me. It's a bunch of incredibly qualified missionary builders that are, that are iterating relentlessly. They're building great products, and their time will come.
And they're doing it regardless of the market speculation. I mean, it's certainly one of those things where one of the greatest gifts that crypto provided immediately was the ability to speculate on all these assets at any point. But it was also, in a lot of ways, a downside to crypto, because it led to so many people, as you said, coming in that maybe don't have the education, that don't understand, coming in speculating, and then losing a lot of money, which is unfortunate and not something we ever like to see, which is why you should tune into Milk Road every day, because we'll make sure you guys don't make those mistakes. What do you think the future of meme coins is?
I think the label meme coins will go away, and it'll just go back to, these are tokens. What do these tokens do? Some of them are just pictures. Some of them are a promise for revenue that's programmatically enforced, and that revenue comes from a product or a business or a protocol. Some of them, might look like very, very traditional stocks on chain, and some of them will be really boring and predictable, like access to treasuries. What might be interesting is what version of on-chain treasuries ends up doing well. Actually, if you looked at like BUIDL, the fact that they named it BUIDL is a meme, right? When we saw some of the BTC ETFs come out, how do they differentiate? Their tickers are memes, right? So I think that that mimetic quality to how asset discovery works is not going to go away, and some of it will still be innovated on in what we think of now as like the meme coin trenches. But what's going to happen is there's just going to be so many assets that have intrinsic value in an infinite landscape of design space, that meme coins will be one small component of all the tokens out there that you have to kind of sift through. And it's going to be completely overwhelming. If people think the trenches are overwhelming now, imagine a world where you have to parse all of this. And I think that's where the opportunity is, just the same way that, if you told somebody in the late 1990s that there would be millions of photos on the internet published like hourly, they'd be like, how am I possibly going to get through all of that, right? Because back then you could get through most of the stuff worth seeing on the internet, right?
Yeah,
right?
yeah.
Get through most of the stuff.
Well, remember when you could get through Instagram? Like, that's not that long ago, where you would get through all it was your friends, and you probably only had, when Instagram first came out, 100 friends, few hundred friends on there, and you could get through everyone's, and it was nice. So you'd be like, oh, I'm done. Great.
Yeah.
But now
finished for the day. I remember being able to finish YouTube, and that wasn't even a friends thing. That was just like, there was mostly crap, and there were maybe 8 videos a day that were worth watching, and they went viral within that little platform immediately. And every message board you went to all had the same videos. And if you tried to post them again, they'd say, old, that's old. Don't try to repost that, right? And you could finish YouTube. Now, no one can finish YouTube in their own personal feed, forever. And I think that's what on-chain assets are going to look like. It's just going to be this infinite feed of assets, and they'll have to be curated and algorithmically served and collected in some way that looks similar to how social media serves this information right now.
It kind of connects to me. The connection that I see coming is the connection between prediction markets and attention, or social media, because what are meme coins really? They are speculating on attention and saying, hey, I think that this thing that Elon Musk said is going to get the most attention, or Elon's going to say more things about it, which is going to bring more attention. That's all meme coins really are. Right now, they're kind of, they've taken a lot of the narrative and a lot of the attention from within crypto. But once prediction markets and meme coins are connected, and I think somebody makes an app that allows you to do that, because already, it was nice when we only had like 10,000 tokens in crypto. Now we've got like 10 million or something like that. It's too many. Like I can't keep track. And unfortunately, most of them are are not. They're trash. They're garbage.
Right. And what you're describing is also a subset of meme coins that tend, they might be the ones that you notice most. But for some people, it's their communities that they're online and plugged into that they're seeing the most interesting assets for. And we probably don't even know what those assets look like. Sometimes I see glimmers of what that looks like. Obviously, there are ways that plays out badly, right? If people take advantage of that information asymmetry and they find a playbook for just extracting, and that is what I think we all just want to go away, right? But I think the way we get there is by bringing more valuable assets on chain, and that's, as you said, it's happening. There's no stopping it at this point.
Okay, I want to lead into institutions and what institutions are doing on Solana, but I kind of want to use meme coins as a lead in here because one of the big positives for Solana that came as a result of meme coins was bringing millions of people on chain. It did serve as an onboarding ramp, and it also tested some of your tech in a way that it hadn't been tested before, particularly with Trump coin, which got all of a sudden so much traffic in such a short period of time. Talk to us about the impacts of meme coin mania and how that sets Solana up for more consumer grade apps.
We first saw this actually going back to NFTs, and this sort of comes back to how does the Solana engineering ecosystem build? It builds iteratively. It sees what breaks and where there are performance bottlenecks, and it focuses on bottlenecks that are proven in reality from real usage, not theoretical based on modeling or consensus amongst smart people about where bottlenecks will be. And I think the more you talk to any engineers who've actually built distributed systems, wireless networks, and database-driven products for billions of people, in the very few places that has happened, that's the way they engineer. And so, with NFTs, we found, I say we, I didn't, the engineers found that there was this really interesting novel state contention problem you could find where everyone is going after the exact same asset, not the same ticker for a fungible asset, but literally the same piece of state that one version of a monkey photo is. Everyone wants to get to that one thing at the same time. And that observation of performance bottleneck in the NFT craze led to things like priority fees and local fee markets, all these innovations that kind of remind me of like when Uber was coming up, and the thing they did really well was they had real demand that they made a responsive system to adapt to, and they came out with things like surge pricing that were controversial at the time, but they worked, and they found out they worked because they tested in production and it load balanced. So I think when we look back at the NFT craze and now the meme coin craze, there are all these little stories of where engineers saw a surprising but known performance bottleneck that they could test their solution for in production because the demand was there. And there's just very few networks. Honestly, I don't think there is another network that has had the variety and frequency of production performance bottlenecks from rapid scaling, rapid virality, rapid onboarding, rapid asset issuance, just every possible bottleneck you can imagine. And that's why now it's just been, it's been a long time since there's been a real like performance, shit hits the fan moment for Solana, like knock on wood, but it's just, it's kind of seen everything at this point. And it's the same network, it's the same state machine. So, what does that mean? Coming off of the last market cycle with all this meme coin mania, I'm not sure anyone could have imagined a more viral, asset issuance moment than the president of the United States launching a meme coin. The network handled it perfectly, right? It was, that's a huge feat. That's years and years of engineering effort compounded for one moment that proved a level of resilience for this network that you can't put in a white paper. You can't make a spreadsheet that says, theoretically, if this happened, no, it happened. All right. So I think there is this thing that takes place though, which is there's some people look at meme coins and this whole craze as a negative for Solana because it's a brand hit, because it's indicative of the quality of assets or users or whatever it is. And I think the smart people look at it and they say, okay, well, if it can handle that, what else can it handle? Or what trust can you compound when you've proven yourself in that landscape? And that's what we see from the institutions that we love working with and that are rushing to Solana, that are building. As you mentioned, Securitize supports on-chain securities. Superstate with Rob Leschner is building on Solana for tokenized equities, and Circle, all the stablecoin issuers, Tether, lots of new stablecoin issuers like USDG, the consortium, including Robinhood. There's just Franklin Templeton. There's so many at this point, and I think there is some risk, right? Like they're building in an ecosystem that's not called Ethereum, and that was supposed to be impossible. 3 years ago, 5 years ago, it was just unheard of. But I think the ones who take that risk and end up taking advantage of the same thing we've been offering for 7 years, which is performance and consumer grade user experience, I think are going to win really big, because we've just seen it. It is a meaningful differentiation for a blockchain, and there's such a thing as Metcalfe's law. The value of the network is correlated almost exponentially with the number of connections you make across that network. So the more assets, the more users, the more issuers, the more applications that come onto Solana, the more powerful it gets. I think this has always been part of the thesis, is that we never wanted Solana just to be an institution chain that only institutions use. That kind of is the opposite of how crypto started. The whole idea is that you level the playing field. It's the same network. It's the same system that you and I can use to interact with each other without any intermediaries. And it's the same system that BlackRock and JP Morgan will have to use, because that's where we are, right? So I really hope this plays out, as I expect, not just selfishly because it would be fun to see, that happen with something that I was a part of, but because I think it's actually just a better future. It aggregates power to retail, to end users who have a choice of where they go, and it makes institutions play by the rules that the users set, and it makes them come to the users rather than them define the infrastructure that users are forced to use, if that makes sense, right? It's I think it's easy to get missionary about this, and I think we want to see more builders who understand that mission, and we want to get better at articulating it too.
Mm-hmm. You brought up when I brought up Robinhood and Vlad earlier, you brought up that were speaking to him. Do you think that there's obviously going to be a move, and a fast move right now, of fintechs adopting crypto? It'll most like fintech 2.0 feels like the next big adopter before the larger institutions, the banks. They're here and they're using it, but I think they'll be slower. I'm guessing you would agree with that. If you disagree, feel free to let me know. When fintech adopts crypto, how are they going to adopt it? Are they going to want to? I see two states here. One, they want to build their own chain because they want to control a lot of aspects of the chain, or I see them using a permissionless chain like Solana. Which way do you think that goes?
Yeah, it's a good question. I guess the first thing I'll say is every market cycle, every time there was an obvious next thing that was going to happen, that next thing was never the next thing. It was always something else, right?
That's true.
Nobody,
Yeah, that's true.
Every market cycle, this happens. So I'm skeptical that, let's just try and put some labels around it. The sort of fintech embrace of, on-chain securities is going to be the entire next meta, because that, I think that it starts to point to this idea that the incumbents, the people that already built distribution, that already have user bases, and that built their brands and businesses in the old world, are going to be the arbiters of what happens next. I think that could happen. I would just be way less excited about that. And
Me too.
Empirically, it's not the way things have tended to go. What tends to happen is the thing we can imagine next, which you had a really good example, 24/7 equities trading. Is it on-chain Apple stock and Microsoft stock and NVIDIA? Maybe you're borrowing and lending against those assets because you have them on chain. Like, that is cool. That's also the fact that that's what we're thinking about just tells me that something much bigger is coming. And what we tend to see is that the people best positioned to do the next thing, they get really caught up in it. They turn everything towards that thing. They execute on it really well, but they're just not positioned for the bigger thing. So, whatever you think of meme coins, this idea that you have this long tail of assets, that anyone can launch, and you have this massive volume that approaches like social media levels of content creation, and that you have all of this operating on decentralized exchanges and protocols, because you could never have a centralized platform that lists and supports all these assets quickly enough. It just can't happen. That happens so fast, and it's all new players, right? It was not, I won't name names, but it wasn't the people that everyone thought was going to win in that landscape. It was new decentralized protocols that won, or that are winning. And I think I would love to see the same thing happen with tokenized equities. We're working with everyone who exists, whose names you already know. They're all awesome, and they're going to do, they're going to build great things, and they'll all support Solana in some way. I just to touch on one point you made, which is that a lot of these folks will want to control their own, environment. I think we still do see that a lot, right? So every market cycle, there's this seductive idea that if I own the distribution, if I have more users than the entire crypto space, if my brand is more globally known for normal people, I should be able to launch a permission chain or my own chain or a layer 2 or whatever it is, and I can become the next Solana. Why should I build on Solana? And I think the problem with that thinking is this idea that like Solana was built from the ground up, and Ethereum was too. They were built from the ground up as a bazaar. Anyone can come, anyone can build your market. And that's deeply ingrained in how, every application, every wallet, every interface, every user interacts with that digital real estate. And this idea that you can just transplant all of that behavior to this completely different place, where people were attracted for totally different reasons. Empirically, we've seen it just doesn't work, right? I won't name every example, but I think Telegram has, hundreds of millions of users. The Ton network was supposed to get all those users. Coinbase, has 100 million users, and Base was supposed to get all those users. The promise for developers going to those platforms was always, come here and we'll get you your users because we have so many. Well, it doesn't work. It just, the user behaviors are very different. People are coming for different reasons. It ends up being cannibalistic to your core business if you've already been successful in building that platform. So, I think what's more likely to happen is there will be more experiments with permission environments, side chains, new layer ones, but there will always be this compounding power to being the largest bazaar, where everyone that comes can build whatever they want, and they get distribution from the network effects of everyone else being able to build whatever they want. And that's what we've focused on from day one. I could be wrong about that, but things seem to be pointing in the right direction, and I think it's a more exciting future if the Bazaar model wins.
Couldn't agree more. Raj, thank you so much for your time today. Truly appreciate you joining us and breaking it all down for us.
Thank you. This was a lot of fun. I'm happy to come back anytime.
Appreciate it, my man. Well, with that, we'll let you go. Thanks so much for listening in, everybody. Have yourselves a wicked awesome day. We'll see you guys back again tomorrow. Thanks for listening to today's episode, y'all. I got to tell you quickly about Avalanche Summit happening May 20th to 22nd in London. One-of-a-kind crypto event that you're going to want to check out if you're in Europe, in the UK, or in the area, or you want to fly over there. It's going to have founders, developers, investors all in one place, a lot of the brightest minds in the space, and a great way to make real connections and to really see what's going on behind the scenes, which I know as an investor helps me build conviction in my investments and my assets. Check it out. Link in the show notes. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your number one resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.